All right, hi everyone. Welcome to today's webinar brought to you by IC Markets. Today's session is going to be on the live analysis. I'm standing in for Emily today. She's not feeling too good, so yeah. So here we go. Thanks for joining us today for pretty much the first webinar of the week. Yeah, if you didn't catch the pre-market analysis earlier today, uh, no matter you can catch up on the current levels that we have set out for this week as well. All right. Okay. Just let me see. Make sure everything's all right. Okay. Right. Right. We'll be covering the major currency pairs, some of the commodities, the indices as well. And should you have any requests, do drop them early in the chat box, and I'll be more than happy to go through the analysis with you. All right. All right. So before we start, right, as usual, let's go through the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should trade only with money you can afford to lose. Right. So my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so before we dive to the charts and trading view, let's take a quick look at what are the key economic events that are lined up this week. There's quite a few things going on, but I just would like to highlight three of them. So they are the Australian CPI data out on the 27th of March, US GDP out on the 28th of March, and US PCE price index on the 29th as well. Right, so this is the calendar for Forex Factory. I'm on GMT time here, so take note the time that is displayed on this calendar here is a GMT time, so that's UTC plus 8. And let's see. Oh, sorry, not UTC. It's UTC 0. Yeah, so GMT time UTC 0. Right. Okay. Right. So we have so as you can see, there's quite a few things coming out this week. We can't go through every single news release here, but let's just cover some of them. So what I like to cover is Australian CPI data that's out on Wednesday, 27th of March, 12:30 a.m. GMT. We've also got a couple of Fed officials speaking as well. We've got Governor Waller speaking on Wednesday, March 27, as well as Chairman Powell himself on Friday, 29th of March. Then we've got GDP data out of the US and Canada on Thursday, 28th of March at 12:30 p.m. So definitely this is going to have a major impact on the dollar CAD. And of course, finally, we also have the PCE price index. This is personal consumption expenditure price index. This is an inflation data point which is closely watched by the Federal Reserve. It is, in fact, their preferred gauge of inflation. So we have the core reading as well as the headline reading being released on Friday. Right, so starting off with Australian CPI data. On the left, I have the chart that shows uh, the quarterly CPI figure at an annualized rate. So as you can see, it's been trending lower over the last few quarters, so that's great. And also, when you look at the monthly CPI indicator, the annualized rate, it has been at 3.4% over the last 2 months, so the month of December 2023 and month of December 2024. February's estimate points to a slight increase of 3.5%. So should we see a figure that's greater than 3.5%, this could then potentially provide or function as a potential bullish catalyst for the Aussie, and we could perhaps see the Aussie rise should we see inflation data come in higher than the estimate. However, if the data itself comes in line with the estimate at 3.5% or perhaps even lower, then that's definitely going to function as a bearish catalyst for the Aussie. Right, moving over to US GDP. So we're going to have the final estimate for the fourth quarter GDP of 2023 to be released, and is expected to remain the same or remain unchanged at 3.2%. Right, the second estimate came out at 3.2% as well, and the final estimate points to no changes in this reading. So compared to uh, the Canadian economy, the US economy is relatively stronger. And so if we do see uh, the GDP data for the US coming stronger than expected, then this could potentially create strong demand for the dollar, and that means the currency pair dollar CAD is likely to rise further. Right. And moving on to PCE price index. So before we look at PCE price index itself, let's just quickly take a look at the CPI and PPI data that came out recently. Right, so on 12th of March, about 2 weeks ago, we saw CPI data that was released. So on the left, I have the annualized reading for headline CPI, and on the right, this chart shows the annualized reading for the core CPI. So when looking at the annualized readings, you can see they've moderated or eased quite significantly since their respective peaks and have somewhat stabilized and do look to be trending lower. However, when you look at the data on a monthly basis, especially for the months of January and February, the monthly data is signaling higher prices. So not only are they signaling higher prices, they've also come in higher than the respective estimates. So that's why we saw a strong demand for the US dollar in the second week of March, right? So 8th of March, we had stronger than expected NFP data, followed by Tuesday, we had CPI data. And finally, on Thursday, 14th of March, we had PPI data, which was stronger than expected as well. So we had three sets of data that really helped stabilize the dollar index during the second week of March, and helped to create uh, this recent jump in the dollar index. So similarly, on the left, I have the annualized reading for the headline PPI on the left and the core PPI on the right. Both paint a similar story, easing very significantly throughout 2023. However, there does seem to be some re-acceleration in PPI, headline PPI, and core PPI at an annualized basis, and that figure is also being, or this re-acceleration is also being observed in the monthly PPI data as well. For the months of January and February, we've seen PPI increase stronger than estimates on a monthly basis as well, raising some concerns that perhaps we are going to see inflation reaccelerate in the producer price index as well as the consumer price index. Now, that brings us to the PCE price index. Similarly, when you look at the monthly gains on the PCE price index for the headline reading on the left, the chart on the left is for headline PCE, and the chart on the right is for core PCE. So, as you can see, especially for the month of January, they've both increased very strongly, right, on a monthly basis. And should we see February's final figure come in higher than the estimate of 0.3%, right, this could potentially create trigger another round of demand for the US dollar, right? So take note of how these respective news releases could impact markets as we progress through the week. All right, okay, with that, let's dive into the charts and trading view and start our analysis on the dollar index. All right, okay, so here I am. This is the chart for the dollar index. I'm on a 4-hour time frame here. So just before we start the analysis, right, I would just like to highlight how the recent data has helped to stabilize the dollar index, right? As you can see, since mid-February, the dollar index hit a high of about 104.90, and since then it was pulling back pretty strongly. However, it found support around 102.70, right, over this period starting on 8th of March, right? As I mentioned earlier, 8th of March, we had stronger than expected NFP figures. Then on Tuesday, 12th of March, CPI came in hot. And then on Thursday, 14th of March, PPI also came in hot once more. So this trio of economic data points helped to stabilize the dollar around 102.75, or the dollar index around 102.75, and then pushed it higher as we started off the third week of March. So last Friday, the dollar index hit a high of about 104.50 and closed around 104.40. So today, it's opened and started to drift a little bit lower, right? Of course, after a strong move, right? As you can see here on Thursday and Friday, this was a very strong move as well. And we may see prices or the dollar index correct a little bit and uh, potentially resume the uptrend as well. Remember, we've got GDP data coming up on Wednesday, and we've also got PCE price index as well on Friday. So both of these two data points could potentially create or provide the bullish tailwinds once again for the dollar index. All right, okay, so with that, let's move on into the 4-hour time frame and try and see where the current resistance and support levels are. Right. Okay. So okay, maybe I'll start with the daily. It's probably that would be better, and then we can zoom in onto the lower time frame. All right. Okay. Let me see. Anything else? Check. All right. Okay. Right. In terms of resistance, all right, quite clearly, you can see the first resistance is at 104.43. Right. This is a level where price closed last Friday. Second resistance is going to be this swing high that occurred here on in the middle of February. And if I stretch it across, here is actually a pretty strong overlap resistance level, right? You can see price finding um, strong support here on 3rd of November to retrace higher and finally break under. And then as price approached this level once more in the middle of February, it made a strong swing high resistance as well. You can see the market structure showing us a strong swing high resistance that occurred in the middle of February. And here, this sharp pullback found strong support, made a pullback bounce here, retraced a little bit higher before finally going lower. Right, so second resistance is very clear. It's at 104.94, which is an overlap resistance level. Right, okay, so you can also draw a Fibonacci retracement, right? So let's start the retracement from here. On this swing high here on the 3rd of October, going down to the swing low on the 28th, we can also see that the second resistance aligns quite close to where this 61.8% Fibonacci retracement is. Although we can see the candle here, these two candles breaking above the resistance level. But however, I just like to keep it on just for reference as well, right? So you can see that here, this overlap level is also uh, lies within the region of the 61.8% Fibonacci retracement. Right, I think there's another retracement I could draw as well. This time from this high here on 14th of February, going down to the low here on the 8th of March. Believe there should be a 78.6% Fibonacci retracement we could use. Yep, that's right. So you can see the first resistance aligns, sits exactly in line with the 78.6% Fibonacci retracement as well over here on this part of the move from 14th of Feb down to 8th of March. Right. Okay. We can also run the Fibonacci retracement for this uptrend here, starting from 8th of March, going up to last Friday's high, 22nd. Let's pull up all the fibs. We can probably see something a little bit more clear when we zoom in onto the 4-hour time frame. All right. So I think resistance wise is quite clear where the immediate resistance levels for the dollar index lie. Let's zoom in onto the 4-hour time frame and see how we can identify the support levels. Right, as I said, first resistance, second resistance, no change. I'll just adjust it a little bit to put it at the top of the candle here. Second resistance, no issues. Right, okay. In terms of support, there's a pretty decent overlap level here around 104.15. Right, so if I pull it back all the way from here, this level was previously a support level back in middle of February, right? Price the dollar index finding support at 104.20, then broke underneath it, and when it broke underneath it, it ran into resistance once, twice, three times, right? Uh, Thus creating an overlap resistance. Then, as recently as last Wednesday, 20th of March as well, it ran into resistance once more. So you can see this overlap resistance level was pretty significant. However, price broke above it last Thursday. So what was previously an overlap resistance level could now potentially function as a support. So that's how we've identified the first support level, which is an overlap level at 104.18. Right, what about the second support? We do see price making a significant swing low of this level here at 103.20 on 21st of March. But that because that's pretty far from where price is currently trading, there may be a level here that may offer some support as well. So when I look across this price level here at 103.64, we can see price finding strong support here several times. I see finding support at 103.64 on 22nd of February, 27th, 29th, and also again on 6th of March, right? And then, of course, it broke underneath it, and as it attempted to rise higher, it ran into a little bit of resistance here for about half a day on the 19th of March before finally going higher. So this level, you can see price has reacted of this level several times in terms of support and resistance. So for something that's a little bit more actionable and closer to where price is currently trading, I would use 103.64 to help me identify as the second support. Right. Uh, and take note, this swing low here is pretty significant as well, because we also have the 61.8% Fibonacci retracement aligned very well with the swing low here as well. So this is something just to take note of as a reference in the future. Should we see the dollar index correct even more and break under the first and second support, so that then the next major support level would be the region of 103.20, which is the swing low that occurred on the 21st of March, which is also a level that aligns very well with the 61.8% Fibonacci retracement. However, we'll just keep the 38.2% for now. Right, okay. And what else can I do? Is there, okay, maybe there's an extension level I could potentially use. Let me see. All right, no extension levels. Let's not use it and overcomplicate the analysis. All right, generally you can see this is where the first support price is pulling back a little bit here. So if you have any short dollar index positions, right, you saw price running the resistance here today and decided to think, okay, maybe there's an opportunity to for an intraday trade to short the dollar index after running the resistance here. Then you can use the level of the first support, the region of the first support, to identify a suitable take profit. So the region of 104.20 would be a good area to help identify any potential take profit zone should you have any short dollar index positions. Right. So, but because we've also got GDP data and PCE price index coming up in the second half of the week, take note the dollar index could uh, pull back in the first half of the week, right, the initial part of the week, and then as the data comes out, and if the data comes in stronger than expected, we're likely to see a return of the dollar bulls once again. All right, so these are the significant support and resistance levels for the dollar index on the 4-hour time frame. Right, so let's move on over to the Aussie, since we've got Australian CPI data as well. And we'll also cover dollar CAD as well, since we've got US GDP data as well as Canadian GDP data out on Wednesday. Right, similarly, for the Aussie, let's start on the daily time frame first. So as you can see, after hitting a high of 66.34 on 21st March, the Aussie has actually pulled back quite strongly, but it once again found support in the region of 65.10. You can see here this is a support level that's held quite steady uh, since 19th of March, and is a level that's currently being tested here as well. Right, so this does look like to be a pretty important pivot level here. Right, this could be a pretty important pivot level around here. So whether price is going to break through this level or not, let's see. For now, for at least for today, price has found support above the pivot of 65.05 and has bounced a little bit higher, retraced a little bit higher. But take note, the Aussie is still probably, I would say, in a downtrend here, right? We can see there's even a descending trend line that we could draw, right, on the daily time frame. There's a descending trend line as well. So and then the first resistance for the Aussie, I would probably place it at around here at the top of this candle here at 65.86. This is for the daily time frame. And then the first major support would be the swing low here that occurred, or this pullback here that occurred on the 16th of November 2023, as well as the swing low that took place on the 13th of February 2024. So this is where the first support for the Aussie lies. That's at 64.52. Right, I think we can also run a Fibonacci retracement from here, 26th of October going up to the high here on the 28th of December. So there's 61 and 78.6 that we could use. Oh no, it's actually right in between. Okay, so that's fine, doesn't matter. Let's not force a Fibonacci level should there not be one. Perhaps over here, we can run a resistance of Fibonacci retracement from this swing high here on the 20th of December going down to the swing low here on the 13th. Let's pull up all the fibs first. 38, 50. Again, not really. There's not any major resistance anywhere around. Right, so let's not use yeah, let's not force a Fibonacci level, should there not be one. Okay, right, okay, so these are what are the levels I see on a daily time frame, right? So let's zoom in now into the next lower time frame on the 4-hour time frame and try and identify and fine tune the analysis, right? Let's try and fine tune the analysis. Okay, basically you can see there is a pretty decent overlap level here, right? You can see price running through resistance here on 22nd of February and then finding support here on 13th of March, creating overlap level. Of course, we see price breaking through this level several times here. However, this might still be a pretty decent resistance level. And because now I'm on the 4-hour time frame, I can sort of see another probably more actionable resistance area or level at 65.75. So I'm going to identify 65.57, sorry, as my first resistance for the Aussie on the 4-hour time frame, and then use 65.88 as the second resistance here. Right, so you can see at 65.57, as price was pulling back at the end of February, it retraced a little bit higher, right into resistance here, and before finally going lower. Then as it broke above this level, it found support as well, creating an overlap support here. And then as price returned once more to this level, found support here for a couple of days before finally breaking lower. So this level does have some significance with price reacting off it several times, be it as resistance or support. Right, okay. We can also run a Fibonacci retracement from here on this high on 21st of March going down to the low on the 25th, or today rather. And we can also see that the first resistance aligns pretty well with the 38.2% Fibonacci retracement, as well as the second resistance, or rather the 61.8% retracement aligning well with the second resistance here. So we'll keep 38 and 61%. Right, pivot is fine. So this pivot is going to be quite important, right? For now, this level has held up, right, pretty well. Okay, over here doesn't look so good on a 4-hour time frame, right? Let's just put it here. This would be much better. Right, so there's also a pretty decent pullback support level here as well at 64.80, right? Right, so for now, price has bounced off the pivot level at 65.09, right? So should we see inflation data come in higher than anticipated, right? Then that could trigger a bullish catalyst, or that data point could function as the potential bullish catalyst for the Aussie, and we may see it rise up towards the first resistance on Wednesday, right? If price has still continued to trade below it. However, if data comes in soft, if we see inflation continuing to dissipate and moderate lower, then we are likely to see the Aussie lose steam as well. And then this pivot level here could potentially function as a potential bearish breakout as well. So take note of how the inflation data is likely to trigger uh, the next or it's likely to trigger the next move in the Aussie, right? Depending on how the data is going to come out. All right, okay, so this is what I have for the Aussie. Let's look at dollar CAD. Right, so when I look at dollar CAD, once again, we'll start on the daily time frame first, trying to establish the major trends. So when I look at the dollar CAD, right, you can see since November, the beginning of November till end of December, for a period of 2 months, the dollar CAD was in a strong bearish trend. This was when the Canadian dollar gained significantly. However, it found strong support here at the end of December, and of course, we know the first 6 to 8 weeks of December saw very strong demand for the US dollar. So, of course, that means currency pairs like the dollar CAD, dollar yen, dollar franc were all rising during this period. Right. However, since 9th of February, I would say dollar CAD has been trading sideways. Right, it's been sort of been trading in this sideways pattern here. Right, trading ranging between 134.50 and about 136.00. Right, approximately between 134.50 and 136.00. The dollar CAD has been ranging between these two levels since the 9th of February. Right, and once again, it has run into resistance around here. So quite clearly, we can see that this is the major resistance area or level for dollar CAD, right? 1.3615 is where the first resistance has been identified. And of course, the bottom of the range here is going to be the first support at 1.3447. Right, we can also run a Fibonacci retracement from this high here on the 10th of November going down to the low here on the 27th. We can also see that 61.8% retracement level aligns quite well with where the first resistance has been identified. The first resistance is a pullback resistance level at 1.3614, which is also accompanied by the 61.8% Fibonacci retracement. All right, so let's get rid of 38%. We don't need that here. Right. We can also run another retracement from here, 27th of December, going up to the high that was formed. Where's the absolute high? Is it this? That seems to be the. Okay, seems to be the high that was formed today. Let's pull up all the fibs. I think there's a 38. Is it a 38? Yeah, there is a 38 percent Fibonacci retracement. It aligns well with the first support. So let's keep that and get rid of the others. All right. So these are the key levels for dollar CAD on a daily time frame. As I mentioned earlier, right, it's been trading sideways approximately between 134.50 and 13600 since the 9th of February, and probably the GDP data that's going to be released on Wednesday, right? We have US GDP data as well as Canadian GDP data that's likely going to uh, provide the direction or the trigger or the necessary catalyst for it to break out of this range, right? So if you get US GDP that's going to be relatively stronger than Canada's GDP, then of course we may see the dollar CAD break above this first resistance level. And although Canadian, when looking at it over the last few quarters, Canada's economy hasn't been that great. Relatively speaking, the US economy has been much better compared to most of its developed peers. So it's quite likely we're going to see US GDP uh, have a higher impact on dollar CAD, and that's quite likely we could see dollar CAD push higher in the second half of the week. But for now, this currency pair has been restricted at this pullback resistance level at 1.3615. Prices could continue to consolidate around this region or drop lower for the next 1 to 2 trading days. But take note, GDP data could likely push this currency pair higher on Wednesday. Sorry, I Steve. Now, so this is a question on TradingView. So if you're watching the stream on TradingView, apparently the audio feed is fine, but it seems like the video feed isn't too great. Yeah, I don't think it's a video feed. Okay, do let me know if you're able to view the video feed on TradingView. No, not yet. Okay, I'm not too sure why that's the case. All right, if not, okay, hang on, let me see. All right, in that case, Steve, why don't you head on over, head on over to this link on YouTube and try and catch the live stream on YouTube. I'm not too sure why. The audio is fine, but not the video here. Okay, but what? Please, yeah, head on over to YouTube to catch the analysis. All right. Okay. So sorry. Back to where I was. Right. Okay. So dollar cat here. Right. Okay. So let's zoom in onto the 4 hour time frame now and try and see if there are any intermediate levels or that we can identify. All right. I think quite clear. First resistance, first support is very clear. Where I would say I would probably try and identify an intermediate support level if I were to take one out. Let's see, probably around the 38.2% Fibonacci retracement level. There is a pretty decent overlap level here, right? Price running the resistance here at the middle of March, finding support here at the end of March. So this level here at 1.3552 may function as an intermediate support level here. Right? It's not the strongest level, I think. Over here, right, you can see price has broken through quite easily here on the 20th of March on the downside and on the upside as well on 22nd of March. However, because there was a little bit of resistance here in the middle of March and on 20th of March finding support, this level here could potentially offer some support. So just something to take note of. Should price continue to pull back for the first couple of days of this new trading week. All right. Okay. So with that, let's see what else can we do. All right. Okay. Let's take a look at gold. Right. All right. We've covered a couple of the currency pairs. Let's look at some of the commodities. We'll look at gold and oil. And of course, should you have any requests for any of the other instruments, please do let me know. I'll be more than happy to go through the analysis with you. Right. Okay. So once again, with dollar index finding relatively strong support in the middle of March and rising strongly, right? So a rising dollar index typically will act as a add downward pressure on gold prices, right? Take note of the negative correlation between the value of the US dollar and gold prices. So let's see, so this been right 12th of March onwards. So since 12th of March, right here, gold prices have corrected a little bit, but it's still they're still pretty strong, right? You can see here, although the dollar index has moved quite considerably over the last 2 weeks, it's moved higher quite considerably over the last 2 weeks. Actually, gold prices have remained relatively resilient, right? The negative correlation isn't as strong as previous periods in time. This correlation currently does look to have weakened a little bit here. All right, sure. FTK trading, yes, I can cover the DEX after this. All right, great. Good to see the requests come in. I'm more than happy to cover the DEX, do the analysis on the DEX. All right, so okay, when we look at the gold prices on the weekly time frame, monthly time frame, this is quite clearly gold is trading at its all-time high, or close to its all-time high. It made its all-time high at $2,222 per ounce. So quite clearly, that's where the first resistance, or that's where one of the major resistance level is, right? And we look over on the daily time frame. This price level here is also pretty important, right? Price running into a little bit of resistance here on 11th of March, and then once again on 20th of March before finally breaking higher. So 2,190 is a more immediate resistance level that I'll take note of. So I'll label that as my first resistance. And of course, the top of the wick here at 2,222 is going to be my second resistance. All right, in terms of support, there's a pretty strong overlap support as well at 2,143. Right, we can see the top of this wick that occurred on the 4th of December. And over here as well, you can see price finding relatively strong support as well above this region since 13th of March. Right, so quite clearly, first support for gold is at 2,143. Right. Second support, where I see the next second major support on the daily time frame is probably going to be around this support level here, 2,700, 2,078. Right. This is a resistance area here on 4th December, another resistance zone here on 28th of December as well. So this was previously functioning as a pullback or multi-swing high resistance level, which finally got taken out on 1st of March, and now could then potentially be the next major support level for gold. So that's how I'm going to identify the second support. We can even run the Fibonacci retracement. Right, so let's run this retracement from here, 14th of February, going up to the high here, 21st of March. Let's pull up on the fibs. Right, we can see the 61.8% Fibonacci retracement aligned very well with the second support, so I'm going to keep that for sure. Uh, and the first support is pretty much in between 23 and 38.2%, so let's not force any Fibonacci retracement levels. Should they not be anything of any use, right? Okay, so let's just keep 61.8%. All right, okay. So let me see what else. Uh, I think I can. Let me see if I can find some useful extension levels. So to find extension levels, we're going to use a retracement tool. So that's going to start from here, 8th of March, going down to the low here on the 18th. So the key extension levels lie at 127 and 161. So you can see the 161% extension level aligns exactly with where the top of the wick, the all-time high occurred as well. So let's keep that on uh, just as reference. All right, okay, let's zoom in onto the 4 hour time frame and try and fine tune the analysis. Should it be necessary? Okay, no, I think first resistance, second resistance is quite clear, right? I think this is pretty clear. Um, if anything, I'll just highlight it, adjust it like this. First support, second support is fine. If I don't think there's anything else that's necessary. Right. Okay. Although there's a big gap between the first and second support, so perhaps we can find an intermediate level. Perhaps we can use a Fibonacci projection to help us do that. So the projection involves 3 points. The first point is going to start from here, 8th of March, going down to the low here, second point, 18th of March, and ending with the high here. Oops, okay, on the 18th. So we can't really use this projection. 100% ends over here. And this is not good. So let's get rid of it. Anything else that I can try and see? Perhaps I can use extension levels here. So I'm going to run the retracement from 18th of March going up to the high here on the 21st of March. Remember, key extension levels are at 127 and 161%. So we may see a pretty decent support level around here, which is at 2,125. Right, it's a small pullback level here that occurred on 6th of March, and it's also a level that aligns well with the 127% Fibonacci extension level. So we're gonna get rid of 161 and just keep 127. Right. So on the 4 hour time frame, this small little pullback level here at 2,125 could be a potential area where price could stall should it break below the first support. But however, take note the next major support zone for gold prices is at 2087. Right. Take note when we drop a time frame lower, we should fine tune the analysis and the levels as well as respect to referencing the starting point, right? So we can see here, we're going to use the body of the candle to reference support level. You can see pullback resistance here, another swing high resistance here. So you could even, yeah, this is pretty much a multi swing high resistance level here in the past, previous multi swing high resistance level. And then also again here, 4th of March running the resistance before finally breaking higher, right? So now second support, yeah, the major support is at 2087. However, take note 2125 is also a region where price could potentially stall should it break below the first support here. All right, okay, so these are the key levels for gold. All right, with that, let's move over to the DEX. Right, most of the equities, at least US equities and the DEX are trading close to all-time high. So let's just quickly start the analysis on a higher time frame. And for equities, I like to start on a monthly and weekly time frame first. So you can see very clearly here, this is a strong bullish move that's occurred since October, right? Since beginning of November. DAX, along with the most of the other major equities, especially the US major equities, indices, they have bounced very strongly since the beginning of November as well. This is a strong move that has lasted almost 5 months now, and it looks like it can't be stopped, right? Even when you look at US 30, which tracks Dow Jones Index, or Dow Jones Industrial Average Index, you can see this has been on a strong bull run as well. Similarly, the US 500, this instrument tracks the S&P 500 futures. Once again, you can see the bottom or pullback support occur on at the end of October, early November, and prices have all or the indices have all bounced very strongly since then. Right. So coming back to the DAX, so quite clearly here, DAX is trading at an all-time high. So quite obviously, this level here at 18,260 is going to be our first resistance where the first major support for the DAX could come is this pullback support level here at 16,469. If I were to just drag it a little bit here? No, just keep it here for now. So at least on the monthly time frame, these are the key resistance and support levels. What about the next resistance level? How are we going to identify a potential resistance level? Remember, take note, DAX is trading close to an all-time high. Perhaps we can use a combination of a Fibonacci projection and a Fibonacci retracement to help us identify the next level uh, above 18,250. Right, so let's do the extension first. Remember, the extension levels are found by using the retracement tool. So we can start from here, 1st of November, going down to the low here on 3rd of October. We can already see price is broken above the extension at 127%. So let's see where the 161% lies. Right, so 161 lies about 19,000 in the region of 20,000. So perhaps this is where the next major resistance for DEX in. So let's label it as the second resistance. We can also try and do a Fibonacci projection. Remember, projection involves 3 points. So we're going to start the first point here, 2nd of March 2020, going up to the second point here, 1st of November 2021, and ending at the third point, which is at 3rd of October 2022. So you can see here the 78.6% projection level aligns very well with where the all-time high has been made, and 100% is the next level above 20,000. So the DAX continue to break higher, like break above the first resistance and the second resistance. We can then use the 100% Fibonacci projection as the next potential resistance barrier. So for now, on the projection side, we'll keep 100% and 7.6%. We'll get rid of 61.8. Right. Okay. So these are the key levels that I see on a monthly time frame. Of course, we're going to dive into the lower time frames. All right, Karim, it really depends on whether you're putting a sell limit at the resistances, right, or breakout as well. So when you're looking at resistances, it depends on the currency pair that you're looking for. Okay, in the case of the DEX, in this case, right, I'll be looking at the DEX at the first resistance as the bullish breakout, so a breakout entry, right? Whereas for dollar CAD, for example, right, dollar CAD, when you look at it on the daily time frame, right? This resistance pullback resistance level here at 1.3614. We are looking at a potential reversal here as well, right? You can see your prices running strong resistance around 1.3600 since 30th of November. So when it hits this level here, we'll be looking for potential bearish reversals or potential short trade in this scenario where we can see price has been trading sideways, right? So for this example of the dollar CAD, where it had been ranging between the first support and first resistance, we'll be using the first support to identify potential buy entries, so bullish reversals, and then target an area within or close to the first resistance as a potential take profit for any long positions. Similarly, as price stalls and starts to reverse and drop lower around the first resistance, it helps us to identify a potential short entry, and then we will use the region that's close to the first support to help us identify a suitable take profit for the short trade position. Right. This is for example of the um, dollar gap. Right. So it really depends on the analysis whether the resistances are going to be used as uh, bearish reversal areas or bullish breakouts. And also, should you have a position, for example, if you had been long dollar CAD on Friday, right, and it was rising strongly on Friday following this bounce on Thursday, right, we would have used the first resistance to help us identify a suitable take profit zone as well. Right. Similarly, here on 20th of March, dollar CAD strongly from the first resistance and was dropping, right, and on 21st March, as, although price did retrace higher first, but as it reversed to drop lower, it dropped lower first. So as price continued to drop lower on Thursday, we would have used the first support to help us identify a suitable take profit for the short trade as well. All right, okay. I'm currently on the daily time frame here, Karim. Yeah, I mentioned that I think a couple of times. I'm on a daily time frame here. Right. So once you establish the levels on the higher time frame, right, then you can zoom in onto the 1 hour time frame, 30-minute time frame to fine tune the analysis and also to fine tune your entries as well. All right. Okay. So sorry. Coming back to DEX. Right. Okay. So let's try and finish the analysis on the DEX. All right. So here now I switch down to the lower time frame. Right. I'm on the weekly time frame now. So you can see this is a pretty strong first support. First resistance, of course, is the all-time high. What other levels that we can try and potentially identify? Otherwise, I don't really see anything here in terms of major support for the DEX here. Like the first clear support is at 16,500. Maybe on the daily time frame, perhaps. Let's see. No, okay, maybe I can use a Fibonacci retracement to help me identify a potential intermediate support level. So let's start this retracement from here, from 17th of Jan 2024 going up to the 22nd. Okay, let's put up fibs. Perhaps this next, uh, okay, there is a pretty decent intermediate support here at 17,874. And if I were to see another pretty decent intermediate support around the 38.2%. So perhaps we can use the 23 and 38.2% Fibonacci retracement levels to help us identify a couple of levels that are a little bit more closer to where price is currently trading. So these two intermediate support levels here, close to the 23 and 38% Fibonacci retracements, could help us identify a potential pullback entry, right, for the DEX. So as you can see, today it is pulling back. Whether it continues to drop lower, we may see. But if it does pull back towards the region of 18, right, it may help us identify a suitable entry for a bullish bounce once more. And also on the daily time frame, you can see this is a pretty, okay, wait, let me see one from here. Actually, we've got a pretty good descending ascending trend line as well. We will make this a bit more clearer. Right, you can see prices bounced off this ascending trend line several times. On 21st of February, you can argue here it came close to this level again on 11th of March and then again on 19th of March. So you can see several times price has bounced off this ascending trend line, highlighting the bullish momentum for the DEX. So if price does pull back towards the region of 18,000, it may help us identify a potential entry. However, there's also you could also play the bullish breakout as well at the first resistance. So of course today the DEX is pulling back. However, if Tuesday and Wednesday we see price reverse or find support around the ascending trend line and go higher, the ascending trend line itself can help us identify a potential buy entry. And also, if you're looking for bullish breakout, you could take the first resistance or all-time high resistance as a potential bullish breakout entry as well. What will be a bearish price level? Okay, MDK trading. What do you mean bullish? Okay, I would say if price, if we see the DEX break below, if I see price, if I see the DEX break below this ascending trend line, and this intermediate support level here at 23.6%, right? The combination of the ascending trend line, and after that followed by the 23.6% Fibonacci retracement level, then I think we could see a much deeper correction take place for the DEX. Right. So for now, it is still in a bullish uptrend. Take note if it breaks this ascending trend line plus this intermediate support level here, that's bounded by the 23.6%, then we are likely to see a more deeper correction for the DEX take place. Right. I think that's what you're trying to ask, right? All right. Okay. So these are the key levels for the DEX. All right. We do have time for I think one more analysis. Is there any other requests? Right. Okay. All right. Okay. Welcome. Thanks, MDK. Right. Okay. Like I mentioned, we do have time for one more analysis. Anything else you would like to be covered? If not, then I'll end the session with crude oil. All right. We'll look at crude oil. So the instrument that I use to that we use here on IC markets is next. Okay. All right. Okay. Great. Let's do UK 100. All right. Let's wrap up with UK 100. All right. Okay. Let me see where's my UK 100. Here we go. Right. So once again, let's start on the uh, monthly time frame to appreciate how this index has been trading as well. So you can see even the UK, the FTSE 100 has been is trading close to its all-time high. Actually, the FTSE made its all-time high back on on the month of February 2023, trading quite close to this level. But yep, so quite naturally, I think the first resistance is going to be at 8,045. And let's see anything else I can try. No, okay, let's. Um, all right, what about the next resistance? Right, since price is trading quite close to the first resistance, how are we going to identify the next suitable resistance level? I think we can use a Fibonacci extension level. So once again, this extension levels are going to be found by running a retracement from here, 1st of July 2019, all the way down to March 2022. So let's pull up extension levels. All right, 137 is at 8,530. So let's keep 127. 161 clearly is too far for the current analysis. So most likely second resistance is going to be around here, the region 8,500 for the FTSE. What about, can we also do a Fibonacci projection? Let's try. A projection involves 3 points. We're going to start here, March 2020, going up to point 2, which is February 2022, and ending at point 3, which is 3rd October, October 2022. Right, I think we can use the 61.8. Let me see. Yeah, okay, the 61.8 aligns really well. We'll get rid of 78.6 and 100 because they're not relevant currently. They're currently not relevant. So as you can see, the second resistance area at 8,550 is highlighted by two Fibonacci levels. Right? We've got a Fibonacci extension at 137%, and we've also got a Fibonacci projection at 61.8%. So should we see if we see break above this first resistance, perhaps triggering a bullish breakout, then within the region of 8,400 to 8,500 would be probably a suitable area to identify as the next take profit for any bullish breakout position. Right. Okay. In terms of support, I think I'm gonna have to down into the lower time frame. So let's drop into the weekly time frame and try and see where the next support level is. All right. I think I just fine tuned the analysis here. On the weekly time frame, I'll use the body of the candle here. And for this, yeah, I think this is fine as well for now. Second resistance. Okay, in terms of support, right, I do see a pretty decent pullback support level here at 7,756. Perhaps this is a level that we can use to identify as the first major support for the FTSE. Right, so 7,757 could be a pretty strong support level here. We can see price making multi-swing high resistance first on 11 September 2023, then again on 1st January 2024. Right? So what was previously a multi-swing high resistance could now potentially function as a pullback support here. Right? I think we can also identify the second support. Second support quite clearly here, 7,500. Right? You can see price bouncing on this level quite strongly uh, in the middle of Jan, the middle of Jan, then again in mid-February as well. Right. Let's see that. Then we can run a Fibonacci retracement from here. 15th of Jan, this low here on 15th of Jan, going up to the high here on 18th of March. This might be the 38 and 50. It's in the region of the 38%. So let's just keep 38%. Right. So we do have our first support aligned pretty well with the 38% Fibonacci retracement as well. All right. Okay. Let me see. Is there okay? 8,500. Pretty far. There's the second resistance. Let's see if there's anything else that we can try to identify that's going to be a little bit more relevant. Let's try here. Right, probably 127, 161. Just something to take note of as well. We do have some other intermediate resistance levels at 8,134 and 8,300. Hi Karim, yes, we are using depending on how uh, the level has reacted, we do use past resistances as new supports, and similarly we use past supports as new resistances as well, right? So this is something that we incorporate in our analysis, whether it's on the 4 hour time frame, 1 hour time frame, any time frame. Past resistance and support levels can potentially function as their opposites in the future, right? So we use uh, that combining with Fibonacci retracements, projections, and extensions to help us identify the key support and resistance levels, and then use that to help us identify reversals, bearish reversals, bullish reversals, or even help us identify potential breakouts as well. This could be a bullish breakout or a bearish breakout. All right, okay. So I'm just going to wrap up the analysis on UK 100. Right, so it's pulling back as we speak on a weekly time frame. Is there any other intermediate support? Let's look at the daily. No, okay, so probably here, as you can see, price made this swing high resistance here on 18th of April of 2023. This could be a pretty decent intermediate support as well, or a pullback support for the FTSE or the UK 100. Right. So as you can see, price this index is currently pulling back towards this level at 7,910. So if it stays up this level here, we may see, and it reverses and bounces higher, then we are likely to see this bullish momentum continue for the UK 100 or the FTSE. All right. So take note, this was previously a swing high resistance that occurred on 20th of April 2023, and we use it now as a potential pullback support level here. So if price manages to stall around this level and reverse to go higher, then we may have a decent uh, opportunity to get in on the rebound as well. All right, okay. So I've come towards the end of today's analysis of today's session. Thank you all for tuning in, and do look out for all upcoming webinars by IC Markets for the rest of the week. All right, take care, everyone, and I wish you all a great start to your trading to the new trading week. All right, thank you, everyone. Much appreciated. Much appreciated, MDK. Thank you guys for tuning in.